But let's stay on the markets here. I'll bring in Alex Pire, client portfolio management, our manager at Seeyond. Alex, good to see you again here. So tomorrow, by all indications, will be a really ugly jobs report. How do you think the market might react to it? So far, the market has continued to ignore a lot of this bad data.
Yeah, Brian, Alexis, thanks for having me. And I think you're making a great point. One of the things that we've been talking a lot about in terms of really the market and how it's been reacting to a lot of the news that it's been receiving, the level of uncertainty has been so high for such an extended period of time now, over 2 to 3 months, where we've been in the thick of it. And then before that, we had seen uncertainty around the economy and what might happen with the Fed and so forth, that any kind of certainty or this kind of environment or of information that might come in is actually perceived as a good thing. So even if the news is negative, meaning that it's another really poor unemployment number, it provides information to people, and I think it gives a sense of relief in a way. So I wouldn't be surprised to see the market going up even with those numbers. The market has been very, very resilient and has shaken off bad news fairly easily over the past month or so.
Alex, does that worry you at all, though? I mean, is this market getting ahead of itself? Are valuations ballooning? When you look at the earnings that are coming out, we expected bad news. For the most part, we're getting bad news. Lots of companies can't give us guidance going forward. So is this disconnect between sort of Main Street and Wall Street at the moment a healthy thing or not?
Alexis, I think you're spot on. Once you start thinking about where the market is today, from the retracement back from the lows that we experienced, we certainly believe that the market is getting way ahead of itself. Now, the market doesn't think about what is happening today, right? The idea of the market is that it's a discounting mechanism for the future. And so it's sort of looking ahead, what's going to happen in the next 6 months, the next year, and so forth. The problem that we're seeing, though, is that, to your point, most companies are removing guidance. The earnings numbers that we're getting, are sort of disappointing for Q1, but the only guidance that we're getting is, well, Q2 is probably going to be worse. But we're not really getting specifics around what worse might mean. We also don't have a vaccine yet. We have hope. We're seeing phase 2 trials. We're seeing an advancement there. We don't have a cure, same thing. We have hope. We're seeing an advancement there as well. And testing is still a concern, right? Getting the amount of testing and availability of testing for the virus itself is not something that we're really up to par or up to speed on yet. And now antibody testing is something that we're seeing a bit of a light at the end of the tunnel. Roche has an antibody test that's being commercialized, that just garnered FDA approval, emergency approval, and that might be helpful. But again, as people or as companies, we don't have a crystal ball, and so that guidance is just not there. So we certainly think that we're a little bit too far into this rally at this point, and that may not be a very strong signal in my mind for investors to get in.
Alex, do you think the NASDAQ and tech stocks more broadly are the best place to be still? They have clawed back gains for the year. And look, Peloton last night, pretty bang-up quarter for them. PayPal stock just hit a record high after their quarter last night. Tech stocks have completely shut off any sense of reality in the U.S. economy.
I think you made a great point. A lot of the companies that have been doing well are the kinds of companies that you would expect to do well in an environment where we're all stuck at home, right? And so I think tech companies, broadly speaking, should benefit from this sort of trend of staying at home, and really longer term. We don't know how long this is going to last, and so there's an expectation that we may be doing this in some form or another for a relatively long time. Now, the financial argument for why these tech companies have been doing so well is that most tech companies tend to be growth stocks. These growth stocks tend to have very high betas, right? Meaning high sensitivity to the market. And so it's sort of leveraging the return of the market, right? If you have a stock that has a beta over 1, the beta of the market, then that stock should do better on the upside than the market is doing. It should do worse on the downside than the market is doing because it's so much more sensitive to how the market is doing. And so, those were some of the biggest losers at the beginning when we got sort of that drawdown. they're sort of the biggest gainers today. But to the point that you just made, Brian, this still is a complete disconnect. There is this sort of cognitive dissonance between the way the market is functioning and what we're hearing about the economy, right? Whether it's consumer spending, whether it's unemployment numbers. And there was a Chamber of Commerce survey very recently over the past couple of days that's saying that almost 40% of businesses small businesses, the 30 million small businesses in the US, could shut down, may cease operations. That would be devastating. Even if it's only a fraction of that number, that could be devastating to the economy. And that's really not being priced in sort of this, what I like to call this exuberance, this hope rally.
So if it's being priced in and we're going to get more bad news down the pike, Alex, do we retest the lows, do you think? Or do we fall, but by not as much as we saw back on March 23rd?
Yeah, that's a great point. So I don't think we're going to retest the lows. I think the government intervention, the central bank interventions will sort of keep us off the lows. They've announced a number of measures, including buying fixed income bond ETFs and so forth, that they really haven't put in place yet. So there's still a lot of ammunition that they can use. There's now talks about a new stimulus. So I would not, I believe that the probability of retesting the lows is very unlikely. Now, do we retrace 10, 15%? That's a high potential, I think, in my mind. From a risk perspective at Seeyond, we're risk managers, we're quantitative managers. And so the way that we look at the market is a little bit different. But what we're expecting is probably a small retracement at some point, some volatility, some elevated volatility over the next few months, probably 6 to 12 months. And overall, an environment of sort of ebb and flow where, that can be difficult for a long-term investor to really time. And that's where we believe that diversification probably makes sense at this point.
Alex, what drives that 6 to 12% retracement?
So, there's a number of issues there. I think that now that we're getting earnings season, we're starting to be able to put a stake in the ground in terms of what valuations truly are at current levels, and get an idea of whether those securities that have been bid up now, a lot of those tech stocks are actually appropriately priced, if you will, relative to where the equation of earnings and price might be. I think we're going to see some potential for drawdowns there, where we're getting back to more of a fair value. It's an exercise, right? I mean, it's finding price discovery is an exercise. When there's a lot of uncertainty, when a lot of the inputs that go into those calculations for practitioners are uncertain, whether it's the discount rate that you should be using, whether it's the earnings that you should be using, the future cash flows that you should be expecting, you're going to have this sort of ebb and flow and kind of movement up and down until you find the right price.
All right, Alex Pire, Head of Client Portfolio Management at Seeyond. Always good to speak with you. Stay safe out there.
Thanks, Brian. Thanks, Alexis. You too.
Hey, investors. Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.